All right, welcome to the daily market recap for Tuesday, November 25th. In today's video, I'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Please enjoy a 25% discount for your first month or your first year by using the code Turkey25 for our Black Friday sale. This is the lowest price that the annual package will ever be, so make sure you take advantage of that while you can. Starting off with the NASDAQ, another great day in the market. I really could not be happier and could not ask any more for the market the past 2.5 days. Basically, since we undercut the lows from Thursday, we recaptured the daily VWAP kind of midday on Friday. Nice strong move there, gap and go on Monday. And then today we had a morning shakeout, built out some higher lows on the intraday time frame under the daily VWAP, recaptured that kind of mid part of the day, and pushed into the close back over the 20-day and the 50-day moving average. Just phenomenal action for 2.5 days. We are still within Thursday's range, so I still expect a lot of volatility. We are still having a lot of volatility, even though that volatility for now is resolving to the upside. This is still another basically 2% range bound day, which if you're a swing trader looking for nice clean uptrends, it's very tough to put on a trade, especially on strength, and expect that to continue without any more volatility. So we have had a great 2.5 days. Now what I'm looking for is a pullback, a higher low, compression of volatility, and then follow through to the upside, and especially a close back through the range from Thursday. S&P 500, really, really good strength here, up 0.94%, back through the 50 and the 20-day moving average earlier in the session. Actually took out Thursday's high and closed above Thursday's open. This shows you just how broad the rally or the snapback has been. A lot of the oversold stocks or heavily shorted stocks and groups have seen some short coverings and a really, really nice move to the upside. So, uh, like I said earlier, could not have asked for a better 2.5 days off the lows here. Now, what we need to see is that volatility compress and a higher low get built. IWO, the growth stocks of the Russell 2000, really showing that the strength is coming from smaller cap names instead of the mega cap tech stocks that kind of led us towards the last bit of that rally. IWO back into the 50-day moving average, took out Thursday's high yesterday, and then followed through again to the upside today. I've seen a couple of people on social media talk about how during the holiday weekend or holiday week, which we have for Thanksgiving, small cap stocks tend to run. I haven't studied that, but it does seem to be holding up at least this year. ARKK, a little bit weaker than the other two, still closing up on the day and back through the 10-day moving average, up 0.5% or 0.6%, but not quite the strength as the rest of the indexes. And then switching over, taking a look at Bitcoin, continues to just kind of wedge into that 5-day moving average. We had the big shakeout on volume on Friday into that 80K area. And if you zoom out kind of into this congestion zone, but we're really not exploding to the upside like we're seeing with some individual themes in the market. Hopefully, we can like just continue to chop higher and at least test the 10-day EMA and this 90K level, but still some weakness out of crypto. Ethereum, significantly stronger than Bitcoin. Just a couple of days of consolidation over the weekend. Really strong day yesterday. And right now trading just under that 3K level and into the 10-day EMA. So some relative strength out of Ethereum versus Bitcoin. Both are still under their 20-day EMA, while the NASDAQ and IWO are back above that. Getting to the liquid leaders, kind of mixed action today. We'll sort this by price percent change, which is perfectly fine. We've had back-to-back days, Friday and Monday, where 9 out of 9 of the liquid leaders were up on the day. The fact that we've got 5 up on the day on another strong day in the market, only good news. Eli Lilly continues its dominance. It was just crowned a trillion-dollar company either last Friday or on Monday. More follow through today with a gap up. Closed right at the high of the day, up 3.7%. AVGO, a new addition to the list, up 1.8%, 1.9%. right at a new all-time closing high, right at that level. Really good action over the past couple days. Google gapped up today, a little sell off in the morning, and then ended up closing well, up 1.5%. Apple, new all-time highs and new all-time closing highs, up 0.4%. First Solar, a bounce off the 5, the 10, the 20-day EMA, and then closed well today, basically flat on the day, 0.2%. NTRA, another healthcare related name, low volume consolidation over the 5-day EMA, extremely healthy action after this breakout in kind of the oops reversal test off the 20-day from 196 to 240. Extreme strength. That healthcare related group is one to focus on. Speaking of which, GH, another healthcare related stock, made new all-time highs yesterday. Very nice consolidation day over the 5-day EMA on below average volume. Nothing wrong with that one. LITE, we do have an unfilled gap here, but we closed well in the daily range. Yesterday it was up 17%. So I really couldn't ask for too much here. The fact that we closed in the upper half of the daily range and still over the 5-day moving average is fine. The only one downside is today was an unfilled gap, but if we can get through that in the next couple days, it shouldn't be much of a warning sign. And then SNDK might have to take this off the list, depending on what other stocks break out from the retail clothing area. But this was added to the S&P 500 yesterday, was trading up near like $250 and then sold off. At one point today, it was down like 5% back through the 20-day EMA, ending the day down 2.8%. Still nothing horribly wrong with this chart, but some good news getting sold off into isn't ideal. Onto the industry ETFs, and I've been talking about how as this kind of correction puts in a low, what we want to see is more themes emerging into the market, showing some relative strength and actually breaking out into a new uptrend. And that's what we got today. Specifically on the home builder side, we saw the relative strength on Thursday, and we noted that because it just closed flat while the indexes were down quite a bit on that sell bar. On Friday, we had a gap and go back through the 5-day, the 10-day, and the 20-day EMA. Choppy action yesterday, just under that 200-day. And then today, another gap up, open on the low, big rally into the 50-day moving average. And we do now have a higher high and a higher low. So this is a confirmed uptrend back through those key moving averages. And now a theme that I want to keep a really close eye on some of the leading stocks within that theme. And it definitely seems like we are going to get some more rate cuts, which home builders are pretty rate sensitive. Another rate sensitive group is retail. XRT, massive move today, right into the 50-day moving average and the resistance gap. Kohl's was up 40%. ANF, Abercrombie, up 24%. After the market close, Urban Outfitters trading right near all-time highs. A couple days ago, I was very bearish on the average American consumer. All the charts were breaking to the downside. We saw a couple stocks get into stage 4 downtrends. We lost the 200-day moving average. But since Friday, we have seen a monster turnaround. Now, I'm not sure if that's just short covering, but this is quite the short covering, if that's what it is. And it just kind of goes back to you can have a bias in the market because of what you're seeing, but if price negates that, you need to start doing your homework on the leading stocks within those themes because emerging themes in the market, they'll start off with price action that kind of makes you scratch your head, make you not want to trust. But as you build out higher low on the index or on the ETFs, the leading stocks within those themes are going to continue to make new highs. Just like we saw with biotech a couple months ago, just like we saw with healthcare, XLV, a couple months ago. And I talked about this in Market Pulse today, where on September 25th, I was extremely bearish healthcare because it had not gotten off its lows. It lost the 50-day moving average on a pickup in volume. But the next day we got a gap up. We reclaimed the 50. The next day we kind of higher highs, higher lows, and then really picked up on September 30th, back through the 200-day moving average and right near kind of the recent rally highs. And at that point, I I noted I was extremely bearish. Price action has proved me wrong. This is a theme to get laser focused on. And we have been talking about biotechs and healthcare related stocks in the group for a couple months now. And now you're seeing everyone else talk about healthcare because they don't tend to look at ETFs every single day. I think that's something you need to do in your daily routine because you start to see stuff like this. You dig into the liquid leaders, try to get situated and see if it is an emerging theme. If so, all that hate, all that bad sentiment eventually will turn into buyers as price confirms higher and higher and higher. Just like we saw with Google, no one wanted Google until price made new highs. Now everyone wants Google. So keep an eye on home builders and retail. PEJ, leisure and entertainment, another group that I thought was cooked. I thought it was done. And then we got a couple gap ups. We've reclaimed the 20-day EMA. So maybe this is the top of kind of a correction rally, and then we start to head lower. But there's some very, very strong individual stocks within these themes that I want to keep a very close eye on and try to get situated in case these are emerging themes. ARKG, the genomics ETF, another healthcare related theme that is very, very strong off the support gap into the resistance gap here at 31. We'll be watching for a 50-day moving average test on a pullback as a spot to get in and get involved. Some other ETFs, biotech, new all-time highs. We've covered that. Or not all-time highs, 52-week highs. Solar stocks and energy, kind of a little bit weak the last couple days, but if this market is going to have legs, this market rally is going to have legs. I think the energy portion of the AI trade is going to be the next one that snaps back through some of these key moving averages. And solar, I know this has been a leading theme in the market. I don't know a single person who owns any solar stocks. And now you're getting a test, like first test of the 50-day moving average after making new highs. And it's not quite responding super strong. So I still think people are kind of sleeping on this. So keep an eye on some solar stocks as well as we come through this 50-day moving average area. And then last one I wanted to cover is gold miners. Really nice tight day today over the key moving averages. Watch for a pullback into the 10-day, into the 20-day, right around the 75.50 area as a potential entry. Then you can keep your stop under the 50-day moving average for that trade. Getting into the long and the short setups, a couple more longs than shorts to cover. First one is GEV, kind of going back to what I said about solar. I just think like energy in general is probably the next group to start to show a bid if this market rally continues. And GEV, I missed this. This was a perfect undercut and reclaim of the support gap, immediately responded to that level. That's a spot that I have alerts on if we get down there, but a quick like morning weakness, build out some higher lows under the daily VWAP, and then a recapture of the daily VWAP would be viable for me with a stop below today's low. Open Door, really nice base that's been forming here. And if they were going to kind of let this stock die, they would have done so on earnings where we gapped down quite a bit and then ended the day flat. The next 3 days, we followed through back right near kind of the previous resistance area. We've pulled back, put in a higher low, and on that higher low, we gapped up, had a strong day up 9%, followed through the upside of 14%, and now a nice tight day right at 1%. Two different areas I would watch for is an undercut of the 5, the 10, the 20-day EMA right around the 740 spot. And then as it recaptures the daily VWAP, that would be my entry. Or if we do get a gap up, an opening range break through $8 would be viable with a stop under today's low. ONDS, this has had really nice relative strength throughout this correction. Very, very volatile stock. I would be sizing this one a little bit lower, but a pullback into the 50-day moving average, this 760 spot, that would be where I would try to look for kind of like a higher low intraday and then get involved there. Keep my stop under the 10-day EMA. Or if it takes a couple more days where we just kind of trend down, that would be a little bit better to allow that volatility to contract a bit. EOSE, another energy related name that we've seen the shakeout last Friday, and then just two kind of inside days. Not technically an inside day, but in the spirit of them. We've got the support gap a little bit lower, so a shakeout into that 1240 spot would be buyable versus Friday's low. Or another one where it's just like kind of weak in the morning, a recapture of the daily VWAP, wherever that would be, and then a stop below the support gap below. AU, a gold name, really nice relative strength compared to gold miners, building out right near highs. Another just like quick pullback into the rising 10-day EMA, right around this $81 spot would be the buy point. Stop would be under the 20-day EMA and the pullback low. TSEM is one of the semiconductor stocks that I'm still pretty interested in. It hasn't really gotten on like a bunch of people's radars, even though it made new highs, has been showing great relative strength. We've never closed under the 20-day EMA. Still don't want to buy it on strength in this choppy market. So a pullback into the support gap, kind of like what we did today, just another retest of that area would be buyable, and then keep your stop under the 20-day EMA. SYM, big earnings winner, up 40% today. Or let me get this right. Was it 40? Yeah, 39.6% today. Closed well in the daily range. Whenever we have a move like that, and it's like still kind of a relatively young stock, like started trading in 2022, we're right near all-time highs. We do have these resistance gaps here, but the amount of volume that came in today and the strong close, I'm not really considering these resistance gaps at all. To me, this is a changing character for the stock. And if I take the trade and I get stopped out, I am going to manage my risk properly. It's not going to be a trade I remember. But this type of reaction to earnings typically, well, it can lead into some very nice uptrends. And this is a stock that, like newer IPOs that are right at highs after earnings, is something that I would be willing to take a small loss on. So a couple different ways to play this. If we get a gap up, then wait for it to pull back into the high volume close from today. Buy it for me as close to that HVC as possible, and then keep a 2 to 3% risk. A little bit better would be a morning shakeout and then some higher lows to get built out intraday, a capture of the daily VWAP right around $75. That would be ideal. Then keep your stop just under 70, 74, a couple of percent under that. But SYM is a name that I'm going to be very focused on tomorrow. Getting back to the home builders, let me just go through both of them. I think the leader of the group is BLD. I think that's pretty clear. One of the few home building stocks that is like right near its all-time highs. Just what is this? About 10% off its all-time highs, above all the key moving averages. No unfilled gaps to the downside, so no overhead resistance gaps that we have to deal with as potential sellers. Really great relative strength from earnings, built out a higher low into the support gap. Gapped up on Monday, tight day yesterday, followed through today. Still don't need to buy this on strength because home builders, if it's an emerging theme, it's still going to be very volatile as people don't believe in it. It gets pulled back, builds out a higher low. So we don't need to chase emerging themes. We can wait for them to pull back and even prove themselves more. It could like this could rally up into new highs, built out higher, like towards this 470 range, and it's still going to be on my radar. But a pullback into kind of the area that we were at this morning at this 430 spot. You have the 10 and the 20-day moving average catching up to that. So you can manage your risk under today's low and yesterday's low, under the 10 and the 20-day EMA would be the spot to watch. I don't really think it's something that I'll trade tomorrow, but again, when we get these price moves that make you think that kind of catch you off guard on themes that you thought were left for dead, that's when you need to do the homework on the leaders of those groups and be laser focused on any pullbacks. IBP is the other one. Very nice consolidation here, a little bit less liquid, but we have a gap today. So pullback into that gap zone into that 260 area would be buyable. Stop under the five, or sorry, stop under the 10 and the 20-day EMA. Frog is probably the best software name that I've seen in the market. Continues to build higher lows and higher highs. Is back over the HVC from earnings. Lots of software stocks got whacked pretty hard in this correction, and Frog has been holding up extremely well. Still don't need to chase it higher, especially if the market has ripped higher for 2.5 days. Pull back into the high volume close, into the $60 range, into the 10-day EMA, right around that spot would be buyable. And then keep your stop under yesterday's low. GSAT, nice shakeout of the 20-day EMA, only one resistance gap right there. Pull back into the gap zone from Monday into that 20-day EMA that would be catching up, and then your stop would be below that. Coles up, was it? Yeah, 42.5%, massive volume. And what I love about Coles here is this is the second gap up. So we had this major gap up that sold off, and this gap up sold off because we still had a declining 200-day moving average. There were still all these recent people that probably bought the dip here that finally got out for or had the ability to get out for break even, and they took that opportunity. We built some higher lows, even though this is extremely volatile. The 200-day went flat, and now this is the secondary gap up. And if you study ANF, Abercrombie, which was one of my better trades a couple of years ago, it wasn't the first earnings gap up that triggered the clean uptrend. It was the second one. So we had this first earnings gap up November 22nd. Then it went sideways for 2 quarters as the 200-day had to get flat and then start to slope up. Then it was the secondary gap up that closed at $30, was up 31% on earnings. And this ran from $30 all the way up to $120 without closing under the 20-day EMA for more than 2 days. Just extreme strength in these retail names. So it is possible. And especially when everyone is hating on the American retailer, myself included, so sentiment is bad, we are seeing price action that is going against sentiment. When that happens, that you need to be focused on these names because it could be the start of a new uptrend. So very similar to that ANF chart. I'm expecting still a lot of volatility here, so I don't want to chase it higher. If we do get a gap up, watch for a pullback into the high volume close or a pullback intraday into like the $21 area. Start to see some relative strength or start to see some higher lows intraday. Recapture the daily VWAP under the high volume close, and I will be a buyer with a stop, whatever the low of the day is. And then BW, this was buyable today. It's an energy name, but it's on the thinner side, so you have to size down a little bit. But shakeout of the 20-day moving average and the support gap today, reclaim both, closed at the high of the day. Just another quick shakeout of that 560 area would be buyable with a stop at today's low. Then on the short side, we'll sort this by average dollar volume. That's not correct. Let me get that. There we go. Okay. First one, AMZN, Amazon, sold off after this big earnings gap up. And you never want to short into a key moving average. Like Microsoft today came into the 200-day moving average and a support gap. And I saw people wanting to short that because it was weak. You don't want to short after the move's already been made. Wait for a lower high rally back up. And with AMZN, we've got a resistance gap. We've got the 20-day moving average. Anyone that shorted this late has been stopped out or is going to really feel the pressure if we can get a gap up tomorrow. So in a perfect world for this short setup, we would get a gap up in the morning. We would uppercut and fail at this resistance gap, this 230 spot. That would be the entry, and your stop would be above 235. Palantir, I still don't think is quite ready for a new short, but still feels like a later stage base. I still have 1/3 of my short position from November 12th. So still sitting in that in some profit, looking to add if we can get a nice rally back up. Let it kind of uppercut and fail at the 10-day EMA at the very, very minimum before trying to add to your short or to start shorting it. I would rather like a couple more days rally into the 20-day EMA and kind of right by where the sellers showed up on Thursday at this 172 spot before I get aggressive with my position sizing. If I do kind of see some weakness at the 10-day EMA, I lost the daily VWAP, maybe I put on like 1 or 2% and kind of add it back to my position. But the more you can give these like washout shorts a bounce and like basically get everyone that shorted late out of their position, the better the risk reward will be. Costco, we've talked about this as a stage 4 downtrend. I I think we probably broke into that last week. Now just looking for a rally back up into what was support, now can turn resistance into that 20-day EMA right around that 912 to 915 area. IREN, the weaker of the two between Cypher, CIFR, and IREN. Inside day with a gap down today, still under the 10-day moving average. Cypher is right around that 20-day and 50-day. So let this rally up into that spot while Cypher goes well past it. Then you would look to short like right into the resistance gap. Keep your stop above the resistance gap here at $56 and above the 50-day moving average. Two quantum names, IONQ, which had a big washout on Friday, rallied back up. Looks pretty good here. I still think this goes higher, probably into that 20-day moving average, the $51 spot, the resistance gap. So I've got my alerts at $50 to see if weakness can show up there. But again, the more you can let these like snapback rallies push higher and push other shorts out before you enter, the better. And QBT, I'll go back to RCL. QBT, same kind of thing, just the weaker of the quantum names. So the one that I would try first on the short side, rally up into the 20-day EMA, the resistance gap here, right around this 1270 spot. I think it's worth trying there, but I think the A plus short entry would be at the 200-day moving average and this 1325 area, 1330 area. So again, let it rally, but the more you can let it rally before you see that weakness, see the loss of the daily VWAP as a short, the better your risk reward will be. Royal Caribbean, I'm a little hesitant to put this on the list because we saw Vikings, another cruise line, make new all-time highs today. And again, like if retail sentiment is very, very weak, like I was very bearish. I've been very clear about being bearish. But if we're starting to see price action kind of go against that, I don't really want to short any names in that theme. Carvana is another name within that retail theme that I think is acting too strong, too short at this point. But with RCL, we've got a clear level resistance gap, 200-day moving average, right at this 278 spot. Let it rally through that area and fail before shorting. Stop would be 2 or 3% above. Last, we have Dave, again, late stage base in my eyes. We've already rallied from $4 up to $280. Touched off the 200-day moving average. We don't want to short into weakness into a key spot like that. A lot of times you'll get like a failed base that breaks down, then it wedges up into a declining 50-day moving average before it breaks down further. So that 50-day moving average right at 220 is the spot that I'll be watching for. If we kind of stall there for a day or two, I think that improves the setup. But that's the first spot that I'd be looking at for potential weakness and to get in on the short side. Then just keep your stop above 230. So that's going to be the daily market recap for Tuesday, November 25th. I hope you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Again, we are running our Black Friday sale, so you can take 25% off either your first month or your first year by using the discount code Turkey25. That is the lowest annual price that annual package will ever be, so make sure you take advantage of that. I hope you have a great night, and I'll see you guys in the next video. Take care.